Hey everybody, welcome to our live Netflix earnings today. It's like I was just here. Well, here I am again, wearing the same clothes. It was 15 minutes ago that we were talking about Goldman Sachs. So today we're going to be talking about Netflix. No, you should see my trending stock video about just buy stock and Netflix and chill. Check that out on YouTube and all my trending stock stuff. That's right, I gave you a little commercial. But when we're talking about Netflix here, obviously it's a huge streaming online movie and TV giant right now. So basically when you talk about Netflix, you got to think about Amazon Prime and their video streaming, talk about cutting the cord and the big media companies and all that types of fun stuff. But Netflix has had some negativity here recently, because people are basically, we're not getting the same growth numbers as expected on Netflix in terms of subscriber growth. Also, you're having some issues with the actual content that they're able to provide. Granted, they have a ton of awesome original content, including Orange is the New Black, which of course I don't watch that ever, and all sorts of other fantastic shows that they have on there. But some of the deals that they've had with movie studios have started to kind of fall off of the books. So now Netflix has to pay more for this content, and they're worried that maybe the growth isn't going to be there. But we're going to go ahead and kick this one like we kick off every one of our live earnings previews. The price, consensus, and EPS surprise chart we have here on Zacks.com. So if you take a look at the black line, that is the price with the right Y-axis. All of these little arrows here, if you notice, a lot of green arrows here are earnings beats for Netflix. Is this right? 1, 6, 7, 8, 9, 10. Look at that. 20 beats in a row? Is that what we're talking about? That's fantastic. The other thing you're going to see here is these multicolored lines. Those represent the evolution of the Zacks consensus estimates over time. So you'll see things got a little wonky here in 2014 where we had these huge estimates and then they came crashing down. Again, crashing down. But this 2017 number, if you see, still represents some big-time growth numbers from what we're seeing now. But this has been kind of interesting. Stock has sort of seesawed back and forth. It used to be a darling in this business, and now you're starting to see, you're starting to see some choppiness here in shares of Netflix. So let's look at this last quarter, big EPS beat. Quarter before that, another huge EPS beat. I think we're gonna have to see what these actual numbers are because 20%, 100%, 250% doesn't mean a lot to me. I want to see the actual numbers. So let's look at the detailed estimates page on Zacks.com. That's going to give us the actual numbers that we've got going on here. So agreement, upside, magnitude, and surprise. Let's look at the surprise numbers. As we suspected, you had a 6 cents versus 5 cents, so a penny beat. Inline, 7 cents. Then you had a 5-cent beat here. And then now you have 6 cents versus estimates of 3 cents. Now let's scroll up a little bit and see kind of what we're talking about this quarter. So now we're only talking 2 cents? I thought we were growth here. I thought this was a growth company. Why are these numbers going down? If you look at the current quarter estimates, it's gone down from a nickel to 2 cents. Next quarter's number have gone down from 8 cents to 7 cents. Current year, though, 27 cents up to 29 cents, $1.15 to $1.12 for next year. If you look at the agreement here, there's, some guys are on different sides of the page here. So you got one analyst, just this last week, increasing their estimates for the current quarter, next quarter, current year, and next year. That's good, ladies and gentlemen. When you see an analyst come out and hike up their earnings estimate this close to earnings, it takes some chutzpah for that guy to come out and do that. That's why this sort of most accurate estimate that we have in the Zacks consensus is an important part here. I mean, the most accurate estimate, the one that just came out recently, right? Because if you're going to go ahead and put your neck on the line this close to earnings, you better have some conviction that this is going to happen. Now, if you do look back here at the upside, it was 3 cents was this estimate the analyst came in at, while our Zach's consensus estimate was 2 cents. So it doesn't sound like a huge, bold statement that this person was taking, but they still took a stand. So that's significant. So keep that in the back of your mind as you think about whether or not you want to be bullish on Netflix. Now, again, overall, this is a Zach's rank number 3 hold, mostly because you got analysts kind of going in opposite directions, and the moves aren't that substantial to the upside. You know, the guy was at 2 pennies, now he's at 3 pennies. That's not a huge stamp of confidence there. Value score of F, growth score of F, momentum style score of D. Not on the good side of either one of those, so that does lean a little bit bearish. So with that in mind, let's take a look at the options chain. Again, I like to use Yahoo Finance because it's nice and easy, right? So Netflix is trading just about $100, right? Let's see where it says $99.42. $99.42. Okay. So let's look at the $99 call. And look, Eric showed me a trick. Alt-Tab gets me the calculator. That's right, folks. So let's go ahead and take $5. Let's add the $4.80, which is the cost of this puts right here. That gets us $9.80. Let's divide it by the stock price. What did I say it was? $99.42. It sounds about right. That's a 9.8% implied move on these earnings. You got to be kidding me. That's fantastic. This is the kind of stuff I love to see, because these are the exciting plays that people want to talk about. This is when you can go out and really roll the dice on something and hit it big, or it could blow up in your face. Either or. But when you see these huge amounts of premium that are priced in, what it helps you do is it actually helps you sell premium and make a few bucks by doing it. Because if you're on the right side of the equation, it's going to end up panning out for you. No, but I want everybody to keep in mind this 9% implied move, right? 9.8%. Let's just call it 10% to make our lives easier. Let's say $1.10 on the upside and $90 on the downside. So, because we're selling premium, I want to, and it seems pretty juicy here, I want to take a look at the front week. So I'm talking the option that's going to expire on Friday. Let's see if there's a trade to be made inside of here, because there could. So looking at the $100 first, let's do the bullish side, all right? So that means if we're going to be selling premium and we're bulls, we're going to be looking at the put side of the equation here, okay? And what was that level I was talking about? It was $90, right, to the downside, and 110 to the upside. So let's go all the way, even out at $90. There's still a decent chunk of money here. And look at 6,500 contracts have traded today. 3,300 open interest at that level. So that's a pretty liquid contract here. So we might be onto something. So let's take a look at this. So if I'm short the $90 put for 140, again, Alt-Tab, killing it with the Alt-Tab, 140. So if I take in $1.40, and one thing I want to do is I want to make sure that I'm not exposed to all this downside risk, because I'm on the hook, right? If this thing unwinds below $90, I'm on the hook for all that money. So if I just look at the $89 call right there, 117. So if I'm short this $90 and I'm long the $89, right? Let's subtract the 117. That's 23 cents of premium I can take in. Now my total risk here is the difference in the strike prices. So from 90 to 89, that's $1. So that's 77 cents of risk that I have, right? So let's go ahead and divide this number by that 77 cents of risk that I have. That's nearly a 30% gain that I could get on this trade. And all I need is for Netflix to not crumble down more than the 10% that the money contract is pricing in. That seems like a pretty good risk reward right there, right? Netflix can stay exactly where it is. It could go up. It could go down 10 points. And I'll still make money on this trade. I'll make 30% on this trade. That's pretty good in a very short period of time. Again, that is if I am a bull. Now, what if I'm a bear? Let's go ahead and do the flip side. So again, instead of being down at 90, let's go out to $1.10. Look at that, meat on the bone. 2,954 contracts traded at $1.10. 23.29 open interest still. So it looks like somebody else might have had this idea too. So let's go ahead and look at how this trade shapes up. So again, I'm bearish on Netflix. I just don't believe that this is going to happen. I don't think this thing's going to trade above $1.10. It's way out there, right? So I'm going to go ahead and sell that $110 call for $114. I'm going to go a little further out with this. I'm looking here, there's only 13 cents there. If I go here, there's a little bit more. Let's do this. Yeah, we'll do the 110, 112. So now that's 89. So subtract 89 cents is what I'm going to do there. That's 25. That ends up being the same. No, I'm going to change my mind. We're going to go back and do the 110, 111 here. So that's 13 cents a premium, right? So this is a little bit less of a reward because you got 13 cents minus the 87. So now you're only talking about a 15% gain that I could potentially get here on shares of Netflix on the bearish side on that trade. So if you see what I'm getting at here is that it looks like there's more reward on the short side of this trade than there is on the long side of this trade if I'm selling premium. So when I see something like this, then it makes me think, well, maybe I should just be buying these call options outright, right? But that's still leaning towards my other side of the equation anyway, where I'm short this put spread and I think I'm going to make money. So it kind of confirms the bias that I have. So I feel pretty good about this. So the trade that I'm looking at personally, you got the bull side, you got the bear side. I'm going to go with the on this one because if we go all the way out to $90, we can still sell that premium, get a nice little trade, nice little shot in the arm if the stock just kind of stays stagnant or goes up. So that seems like a pretty good idea to me. And I don't have to worry about putting a lot of money on the table by going long on the call spread or anything like that, or just going flat out long the call because we already seen that these are actually pretty pricey at this level. So that's I think that's the trade that I'm going to take. So I'm going to go ahead and I'm going to sell that put spread here and be bullish on shares of Netflix in the short run. So again, thank you so much for joining me this afternoon. We've got an action, though. I'm pretty sure we're doing, what are we doing, Chipotle on Wednesday, I think? Something like that. We'll fill you in with more details. We've got a couple of other options, strategies that we're going to be putting together this week. Again, go ahead and chime in below. What is it that you guys want me to talk about? We did Goldman Sachs because you asked, so go ahead and ask me about something else, and I'll be sure to throw that on the calendar because I'm always looking for new ideas to do for this show. Again, thanks for chiming in below. Thanks for coming out to see me, and I'll see you guys live on Wednesday. Have a good one.